Okay, I could do two things right now. I could either get very upset or I could gather myself, as I've just embarrassed myself over the past 9 minutes, saying some really amusing things, to be honest with you. Uh, and Unfortunately, nobody heard them but me. Let me pause here. My microphone is no longer muted. Some levity, some humor. One more time. Let's go. Okay. Good old Zelensky. That is the guy that they want you to believe is the fearless leader of the Ukraine. And I'll try to summarize what we just went through for the past 9 minutes of absolutely getting no bang for the buck. And I'm shocked that I kept this many people on that long. And I guess the question was on your end, when is this guy going to realize that he's muted? All right. So that's Zelensky. Really quick. Let's get through this. We had 2020, COVID, 2021, Vax, 2022, Ukraine, 2023. Now, why do the Israelis need jets from Lockheed Martin to fight a population of 2 million in the Gaza Strip, which is about the size of Jones Beach here on Long Island? And they have 2 million people, 45% of which are of fighting age. They could wipe them off the face of the map today, and they are trying to do it. Why do they need Lockheed Martin stock, which is up? It was up about 10% on the week. Now it's only up over 8.33%. But you could see how we were dropping like a rock. And the phone calls went over to Washington, D.C. So this is Christ. We got bonuses we got to pay out over here. You guys got to, you can't get a new speaker in there fast enough for our stock not to drop another couple of bucks here. We got to pay our employees big fat bonuses, not the little guy, but the big chiefs up top. So what we need you to do, Congressman, Senator, you need to make a phone call over to the Middle East or wherever you got to make a phone call. Get something going by tomorrow, being Saturday. Sure enough, that's exactly what happened. And they are fanning the flames for war. Is the U.S. getting involved as Israel fights Hamas in Gaza? What to know? What's there to know? You had the Yom Kippur War, which last Saturday was 50 years since. And you would think that the Israelis would have been prepared for what was about to happen, but they weren't. Give me a break. Give me a break. And what they're prepping for, and just a reminder, if you're not familiar with the Yom Kippur War, that's when Egypt and the Syrians attacked Israel on two fronts by surprise on Yom Kippur. So they need the United States now, boots on the ground, jets, to go moving in to help the Israelis with what? A population of fighting age people of about maybe 500,000. They have 3 million soldiers on active standby, the Israelis. I don't think they need us. So they're prepping for the new thing. So how was your day today? How was it? And this is the reason why there's a new thing out there, besides the fact that Lockheed Martin stock is dropping like a rock, or was dropping like a rock until Saturday. So check out your congressman, see who gets contributions from Lockheed Martin. And sure enough, I'm sure that they got a phone call last week. Let's get something going here. Our stock is dropping like a rock. So today, the stock market finally took a breather. You had CPI, which came out. I'm drinking my tea, coffee all day. Now I need my green tea with blueberry flavor. Oh, very good. So that way I can go to sleep tonight. So what they don't want you to do, long story short, they don't want you looking at this. They don't want you talking about this. They don't want to know the why. They don't want you asking the reason why. Why am I putting money into my 401k every single month? But ever since this Biden got into office, and it's just going nowhere. It's going nowhere. And why is the stock market tanking like this? Why is inflation rearing its ugly head? They don't want you asking those questions. They want you to choose a side. Israel, Palestine. Choose a side and argue amongst yourselves. It all has to do with this nonsense that we've been through since 2020. Lockdowns or no lockdowns, vax or no vax, anti-Ukraine, pro-Ukraine, Israel, Palestine. It's the same nonsense. It's the same game. Don't let them take parking space up in your head. You're here for a reason. That's the focus. Focus on one thing. That's putting a buck in your pocket. That's it. Zero-sum game. The markets do not care whatsoever about the atrocities, the sad atrocities that are going on out there. And when it comes down to your portfolio, unfortunately, hate to be cold-blooded like this, no matter who's getting killed, you shouldn't either. You got to look at the big picture. What is going on? Are we getting played? The answer is yes. And when you take a look at what happened here today, stocks plunged, yields soar after horrific 30-year auction, tails most in 2 years. Basically, there's no demand at these yield prices for our debt. The bond vigilantes are back. The bond vigilantes, which came out in the 1970s and haunted the Federal Reserve for about a decade, they are back and back in force. They want more yield. And when you take a look at prices, which we're being told that prices are really coming down, we really ought to appreciate the Federal Reserve and the soft landing that they're orchestrating. And to be honest with you, you take a look at wheat prices, corn prices, you take a look at soybean prices, they've all come in, even livestock, actually cattle prices reversed last week. But orange juice, there are other pockets of inflation out there that are not going down. And in fact, this rally here in orange juice is just ripped the heads off of shorts. I mean, this is incredible. It's unsustainable. There's going to be a vicious crash here. But right now, look out above for shorts. So where else are we seeing inflation? Where else are we seeing it? We're seeing it everywhere. Everywhere. And it's starting to make its way into a certain segment of the stock market, which has been pretty good. So when you take a look at Chipotle, this is out as of today. Chipotle plans fourth price hike in 2 years to offset inflation. There's only one problem. Normally, like on round one of the the price hike, round two, they were getting it. They're getting those price increases. But there's something that's called demand destruction. That usually happens in the oil market. I'm sure it's going to happen in orange juice. Demand destruction. And that's when the price gets so high, people just go, you know what? I'm going to go with a different alternative. The oil, you have no alternative. Oil, people just stop driving and they shut down the economy. That's why the economy is so susceptible to recession when oil moves up higher. What with names like Chipotle, you know what? I'll make it at home. Rice prices have come in. Wheat prices have come in. I'll go out to the store. I'll make it myself. So how is Chipotle's share price doing? They're going to make more money, right? Apparently not. Chipotle's share price on the news drop over 1.5% today. And we are going lower. The 50-day is going to cross down below the 200-day moving average in a short period of time. Now, I pulled up Chipotle because I thought that they were part of the triple Qs, and they're not. So I'm glad I did the fact check, or else I would have been embarrassed. But names like Netflix also going to be increasing prices down nearly 1.33% on the day, and on the week, down 5.33% on the week. This is going lower. Dollar Tree up on the day, but for this one, I'm going to go to a monthly chart. We're only down 1 month. Let's go to a yearly chart to drive home my point. Dollar Tree is down 24% on the year. And this is a deep discount retailer. So what gives? What do they have in common? With the exception of Chipotle, all of these, Pepsi Cola, look at this train wreck, down over 2.75% in a day. This is a consumer staple. XLY, consumer discretionary names, down 1.09%. Consumer staples, down over a percentage point on the day. You don't even want to look on the month, down 3.75%. This is supposed to be a safe haven. But what do these names have in common, with the exception of Chipotle? They are all members of the QQQ. And the QQQ has been the leadership group of the equity markets. The problem is that on an equal weighted basis, you take out, and this is interesting. Yeah. QQQ was down just over 1/3% on the day. You take out all of the big 7 stocks and you equal weight them. They're not weighted towards Microsoft, Apple. Not that Apple's doing great. But you take them out and you equal weight all of them. The QQQ equal weight was down more than twice as much as the QQQ on the day. In short, the foundation of the triple Qs is breaking down. The only thing holding it up is Meta, Microsoft, which broke out yesterday, did a retest today, and a couple of other names. Once they go, if they go, you're going to see this market drop like a ton of bricks. Let's say hello to people while I'm coming off on good news. Talon, I should have saved your number. I was like, who's calling me from California? Thanks, Talon. I appreciate it. This is an R-rated. Corey, that's very, very good. I may steal that from you. Yeah. Hopefully I played it off fairly well. Thank you, Jeff. Thank you. All right. Jody, can you re-say? I think I re-summarized it pretty quickly. Even with no rate cuts, 2024 stocks likely to move higher as inflation is moderate. Bull train leaving the station. Get your ticket now. Maybe. And I'm gonna leave off actually with a chart that may even reinforce your argument. So I'm not saying you're wrong. If only I had the audience. So I did have a visual audience, so at least that's something. That's right. One more time. Seymour Rivers, thank you. We're good now. Dish, very undervalued, making profits, blah, blah, blah. Michael, you love that Dish, man. Always out there. They ought to pay you. Why did so many companies sell off so hard today? Look no further than inflation. We're going to go to a chart in a moment in the 1970s. Demand destruction and a slowing economy. Chipotle lost me a customer during COVID. They were awful forced to use dumb online app. I see. Bob, is there a difference between down and an opportunity versus down? And should we be scared out of positions? That's a great question. Yeah, I think what you want to do, I'm a big fan, and this is the reason why I got involved with TrendSpider, because they were and it's not a pitch. I did not even have their advertisement up in front of me. 35% discount, go below. So it's a great, great question. And yeah, so what you want to do is when you have a pullback in a market, you want to take a step back and say, okay, it's a pullback on let's say a daily time frame. What are we doing on the weekly time frame? Have we broken trend? Are we at support? Are we putting in higher lows and higher highs? So a pullback in that environment, if the answer to all of those questions is a yes, we are in an uptrend. We have not broken trend. We're continuing to put in higher lows and higher highs. Volume is reasonable. We're closing at the highs of the day. The advanced decline line is favorable to bulls. The put call ratio is not spiking through the is not spiking through the roof. That would be a contrarian bet. Is not being spiked out. There's not a lot of fear in the market. So in that type of environment, that's a buy opportunity. You want to take advantage of those opportunities, but you need to take a look at it not on a linear view. It has to be on a macro view. So you may be trading off of a daily chart, but to answer all those questions, you need to be looking at a weekly chart and saying, is my trend intact along with the daily trend? Or am I fighting a downtrend on a weekly chart? I caught an uptrend, a quick scalp to the upside in the markets on a daily time frame, yet the trend remains down on a weekly view. That's when you want to get out at the top of that trading range. And if you begin to break down to new lower lows on a weekly chart, then you got to get out of that. You're fighting the market. So in this environment here, right now we're flirting with a breakout on the triple Qs. They tried it today. They tried it very, very aggressively this morning, and they failed. Can they do it tomorrow? Maybe. To Larry's point earlier, we have a seasonally favorable period of time coming up. I know I have the chart up here in a moment. Here, I'll just cut to it. So we have roughly, let's say 15 days, half a month to go in October. Anything can happen in October. But when you go into November is seasonally, this goes back 30 years. This is what, the S&P 500? Yeah, S&P 500, November through the end of the year is by far the best time of the year. So we need to put that into context as well. I can't come on here being all doom and gloom about the reasons why equities should pull back and not point out the obvious that we're heading into a seasonally favorable period of time. Do you have one-offs where they're not? Sure, of course. But by and large, we're heading to a seasonally favorable period of time. So while I want to come on here because I'm short the Qs and I want to see them drop like a rock, I may not get my way. Now, I should be able to get my way because you take a look at the fundamentals, you take a look at the PE. PE is near 30. That hasn't changed. Buffett indicator remains overvalued, seems perpetually overvalued. The Fed continues to reduce its balance sheet ever so slightly, still down below 8 trillion. But you can see they were less aggressive last week. And it makes you wonder, are we flatlining out here like we did just before the regional bank crisis? So those pressures on the market aren't going anywhere soon. And the reason is that Powell knows all about this. There was a Fed chairman before Paul Volcker back in the early 1970s. His name was Arthur Burns. And Jay Powell is not a dumb guy. I don't know why he wants this job, to be honest with you, because there's no soft landing for this job. But I guess he likes a challenge. Arthur Burns cut rates too quickly after fighting inflation. And what happened? Surged back. And Jay Powell does not want to repeat that mistake. I think that's front and foremost in his mind. So if anybody thinks there's going to be a rate cut anytime soon, they're sadly mistaken. And when you take a look at the Federal Reserve, let's refresh this because this changes. So yeah, it changed just in a few minutes. So yesterday, the expectation for no interest rate hike in November was nearly 91. Today, that's pulled back to 85.1. Let's face it, they're not raising interest rates this month. Now, what is now back in play, which was not in play yesterday, was December. December, as of last night, there was a 71.8% probability of no rate hike in December. It is now only 65.5. This is help driving this. And what's driving the inflation number of this guy here? Paul Krugman reposts this. If you don't know who Paul Krugman is, Paul Krugman is a Nobel laureate. His words, when they are spoken, are as if they are from an economic god in the leftist world of fuzzy math. The media loves him. Academia loves him. He's a left winger and he has zero clue. He's a propagandist. I'm sure he has a clue, but he's a propagandist. So Krugman puts out today the esteemed, the venerable Paul Krugman. The war on inflation is over. We won at very little cost. This was 6 hours ago. 6 hours ago. And he's citing the core number on the CPI. CPI ex food. Anybody see orange juice lately? Anybody seen live cattle? X energy. Anybody see oil today? Reversal bar. Closed flat, but reversed off its lows. Shelter, we'll get to that in a moment. Used cars, yes, they are declining in value, but that is slowing. The rate of change is slowing there. So let's go to shelter for a moment. This is from the Kobisi letter. Hopefully I'm saying that right. He puts out some really good stuff. Breaking median monthly rent price in the U.S. hits a record $2,052 per month. This is national. Median monthly rent prices are up 6% since January and continue to press higher. As of the latest CPI report, shelter inflation in the U.S. is now at 7.2%. By far, that is the largest element of anyone's budget is their housing. At $2,052 per month, the median renter is now paying, this is net of taxes, $24,624 in rent, no equity. That's 35% of median pre-tax household income without building, I just said this, without building any equity in a home. This is the government robbing you. If you don't own a home, they are robbing you. And here are the price trends. North, East, West, United States, South, Midwest. Horrific. So why am I blaming it on the government? Surely they want your vote to get reelected, right? Apparently not. They don't need it. They don't need your vote. If they needed your vote, they wouldn't be importing 5.7 million million migrants, illegal immigrants. Biden wants to provide medical services and housing to all. That's really, let's pull on the heartstrings. Let's get this out there, the new thing. Let's hate on me because I don't want illegal immigrants coming across that border. So what does this do? What does this do to this figure here? Rental trends. When you have more supply, you have more demand driving up prices of rents. Not to mention the quality of life goes down. What about the medical aspect of this? Medical services and housing to all. The quality of your and my medical care drops like a rock. The cost goes skyrocketing because we're subsidizing people that aren't supposed to be here. So you tell me, how is the government helping and not stoking the flames of inflation? Folks, this is all intentional. This is all one big game. And if you're saying, you know what, I wish the Republicans would get into office, they'll take care of this. Don't be so sure about that, because the Chamber of Commerce is the one probing or poking the president, and the Chamber of Commerce is run by the Republican Party, trying to get cheap labor into the country so that they don't have to pay up for the inflation that's out there. So prices will keep going up. They don't want to have to pay out any more wages, and they screw everybody, with the exception of those that get paid the big money for playing the big grift, like the Lockheed Martin management. Folks, I started this off with this and with this for a reason. And that's to really drive home that that's to really drive home that here's this guy. This is not a meme. This was his career prior to being president of Ukraine. Or I should say dictator, because he's banned all opposing parties, closed churches. This is the guy that we support. $110 billion gone. So if we're focusing on this guy and we're focusing on fighting each other, we're not focusing on them. Got to focus on them. And that's how you're going to make money. Because the default rate, when I first got into trading, it was around 1990. And we were in a recession. I was so young and new into business that I didn't know. I was finally making some money. And I was like, all right, this is cool. I didn't even know we were in a recession, to be honest with you. And then a year or so into my career, I realized that there were opportunities out there with the foreclosures due to the S&L crisis. And I was like, oh, okay, I get this. Now I understand there's opportunity out here. So the reason why I bring up the 1990s is because we are now at the highest delinquency rate on credit card loans since 1991. Think about it. But Bidenomics is working. The government is doing everything they can possible to help us, right? Never forget. Never forget what they're doing. Never forget this. Never forget this guy. This is what they're doing. They don't want you asking questions. They'll probably demonetize this video. They'd be crazy not to. So while inflation's ramping up higher, non-farm payrolls, job openings are collapsing. Look at this trend. Wages not keeping up with inflation. Inflation rising. Job openings crashing. Delinquency rates through the roof. I don't know how else to paint this picture. I don't make this stuff up. This is the reality. Now, sure, can they spike this market up higher? Yes. The reason why they're going to be able to do it is because we should have been in recession by now. But they pumped all that money, over $500 billion, into the economy back in March through May because of the regional bank crisis. And that's what's allowing the liquidity to keep pumping this market up higher. At some point in time, that's going to come unwound. Can I convincingly say that we're going to crash this year? No, I can't. Seasonality is against me. Would I rule it out? Crashing? No, I would not. Every Thursday, they put out this data. Every Thursday, I come on here and I repeat the same thing over and over again. Banks use the Fed emergency funds new hit. Excuse me. Let me try that again. Maybe I should go on mute. Banks use. That's the New York in me. Banks use of Fed's emergency funds hits new record high. Retail money market fund inflows surge. Folks, this was supposed to be resolved months ago. But this is the regional banks going over to the Federal Reserve saying, please, may I have a bailout? Please. That's what this is. If this wasn't here, regional banks. Now they're talking about Bank of America potentially being insolvent. God forbid that happens. That'll make Lehman look like I don't know, your local savings alone. All right, we already went over this one. Seasonality looking favorable once we get into November. Yield curve. Yield curve is down on the week. We're going to talk about this more in a monthly time frame in a moment. We got about 15 minutes left. Let's blow through a few weekly charts. Let's go to comments first. That is correct. Housing totally out of range, particularly on the levels. There's going to be a crash. Unsustainable. Yep. Thank you, Jeff. Nothing wrong with being pissed about the border. I am white, Texan, married to a Mexican woman. This border is out of control. Military. Yeah, and I don't think it's a white thing. I know black people. Most of those border agents are of Central American descent, and they're freaking out. They're ticked off. This impacts their quality of life. They have to live down there. So I agree with you, Corey. Standard operating procedure by the cabal. Look here. That's right. That's right. Look at the shiny object. Okay. Let's move on. Let's talk about the weekly charts for a moment. I'm going to try to blow through them really, really quick. Now, the yield curve, this is a quarterly chart. I already went over the weekly chart, but we're now well into the new quarter. And it didn't take long to have new quarterly higher highs here. So the yield curve remains inverted, but you could see that things may not be all that lovely out there. As measured by lower highs. Now, maybe we'll break out. Maybe we will. Again, seasonality going into November. November is by far the best month of the year in terms of seasonality. So right now the stock market is in check, but trust me, folks, this is a looming problem. We've gone over it many, many times. I don't want to dwell on it. Not enough time tonight. And when I say for news people out there, I know some new names here. It's not the inversion of the yield curve. It's the steepening of the yield curve that hurts the stock market. 10-year yield on the week is down on the week. The however is, folks, outside reversal bar. Folks, if you're not familiar with technical analysis and what an outside reversal bar is, I have a 5-part video tutorial, my top 5 favorite candlestick patterns, free. Take advantage of it. Outside reversal bar. Yields look like they want to move up higher. And that's going to be a problem. Now, Momentum is waning. This could have been a sell-off in the bond market as a knee-jerk reaction to the CPI data, and the also reaction, of course, to the poor auction that went off on the 30-year bond. Does this have legs? We'll know soon enough. What we need to do is this. It's simple. The test is always at the top. Don't go crazy. Just take your crayon out. Draw your line of sand. Did we break out to a new higher high? No, but what we did is we recaptured a prior support level. That's step number one to moving on to new higher highs. Now, we do have a couple of more resistance levels immediately above. So we'll know soon enough whether or not this rally in yields has legs. Now, TLT, I had a trade on here, what you call a strangle, and we were up 40% on it. And I took that trade off the table today. We booked that profit because I'm worried about the TLT rolling over and breaking down to new lower lows. This is a weekly chart. While still up on the week, we are well off the highs of the week and threatening to break to go lower. So when you have a 40% profit, you take it. You don't hope. Hope is not a strategy. Make it real. Go get liquid and move to the sidelines, which is exactly what we did today. Daily view. Now, this is a test that's going to happen here for the bond market. So it's the inverse of yields. Do we break out or do we break down? Simple question. Now, in this type of environment, we want to get our crayon out. If we break 84.06, that means yields are surging to new 52-week and multi-year highs. The probability of the stock market being able to withstand that is highly improbable. Remember, the reason why we had the gamma event, the reversal day, what was it, last Friday? The reason is that bonds began to rally and yields began to pull back along with the US dollar. That may be over. Let's do this. Forget that. So do we wedge out here? Do we put in a higher low? Do we retest 84.06? Do we break out? I don't know. I'm not going to take action right now. I don't have an edge here. My edge is gone. My edge is when I sold puts down here. My edge is when I sold calls up here. My edge is gone now. So I don't know what to do. All I know is this, is that if we break down to new lower lows, the probability of new lower lows below that is very, very high because the path of least resistance is clearly still to the downside. If we break out, well, we'll have a long slugfest back up to where we were in prior years, but we'll probably move up higher, at least in the short term. Odds favor bears, folks. The tip market was strong, now weak, still up on the week. Why did bond tip Treasury inflation protected securities, why did those bonds pull back today? Simple. They're worried about more rate hikes. You buy tips when you're worried about inflation and a Federal Reserve that is not being aggressive. If they worry about a December rate hike, you don't need tips. Now, this chart here is the chart of the day. It's a weekly chart of the US dollar. And this is the reason why we booked profits today in NUGT. We bought some last week at near the lows, and I sold covered calls. We still have those. They're now naked calls. We booked profits on the trade, raised capital, because I've been worried about a reversal in the US dollar, and we got it today. One trading day left to go. Maybe we'll close at the lows of the week tomorrow for all I know. But right now, it's not looking good because the dollar's reversal today, man. That's pretty scary stuff. So if you're thinking about buying gold, silver, miners, don't. Emerging markets, don't do it. Not yet. Consult a financial advisor. Daily chart. Look at that reversal bar. Now, what I think we may do here is do a pullback and a retest of 106. The however is, if we follow through and break out to new higher highs, take a look at the Dow Jones Industrial Average and just say bye-bye, bye-bye, because it's going lower. Why the Dow Jones? They produce a lot of stuff that we export. And if we have a very strong US dollar, it makes our goods overseas more expensive. The euro, reversal bar. Yen, reversal bar. Vol, weekly chart, volatility. Down on the week, if you can imagine it. Daily view. Up session, faded off the highs of the day. Dow transports, up on the week, still by a percentage point, but a fade off of resistance. So the question is, it's very, very simple. If you want to be directional on the market, take your crayon out and identify where we're at in terms of trend. Well, it's an up week, but we remain in a downtrend. We hit the upper band of the declining downtrend channel, and there was a rejection. Maybe we'll break out tomorrow for all I know. I don't know. But it's not looking good. So the path of least resistance right now for the Dow transports remains to the downside. Dow Jones Industrial Average closed up on, up on the week. A little bit of a fade. I think it was up on the day, though. No, it was down half percentage point. I don't look at the Dow that much. S&P 500. Now, we, as of last night, had broken out. This is why if you're going to use a weekly chart, before you make your decisions about whether or not you're going to buy a stock because of a breakout, wait till Friday. Wait till Friday before you get aggressive, at least. Make sure that it's going to hold that breakout. I mean, if you looked at this chart last night, you'd be saying, wow, time to back up the truck on the spoos. Now today, what a difference a day makes. Daily chart. Now, the 50-day moving average is a declining ceiling for any index, any stock. So that's a problem. We did manage to close above the 20-period moving average. We're at an inflection point. The only real saving grace I have for the S&P 500 right now is that you have the 200-period moving average, which is rising. And momentum is still okay. Volume, though, rose today to about average. The Qs. We're not ready to go over the daily chart yet. Let's go to the weekly chart. So we're still up nearly 1.5% on the week. We're flirting with real serious resistance. And that's why there was a huge effort this morning by bulls and the algos to keep this market alive after that CPI report, but they couldn't do it. So on the week so far, we're looking okay here. I mean, I have a short position here. I reestablished shorts, nibbled throughout the week, and at higher prices, happy to say. Not as aggressive as what I was, but My bet is that this fails. Could be wrong. If it breaks out, I cover. Look at the volume on the week so far. Horrible. And when you take a look at a daily time frame, if you're wondering why I began to short again, look at this ascending wedge formation. This was unsustainable. And we were seeing the apex of that wedge formation up and into one of the most serious support resistance levels on the triple Qs. We have earnings that begin in earnest tomorrow as well. Not that the JP Morgans of the world are in the Qs, but you get my point. It certainly could drive sentiment in the markets if the earnings don't come out really, really strong. Now, the one big difference about this quarter versus the past 2 quarters is that the prior 2 quarters where we've gone into earnings, expectations have been lowered. Going into this earnings period, by and large, expectations have risen for earnings. So there could be a beating on some of these stocks if they miss or if guidance is not up to snuff. If, sir, you feel like touching on the Russell, I will be doing that in a moment, Tony. The Russell was down yesterday when every other average was up. So we'll touch upon that in a moment. Falcon, can we look for a W for a bounce opportunity? Well, yeah, this is technically a W formation. I mean, if we managed to break out above the pivot point at 380.28, that would set the stage for a massive, massive bull market run on the triple Qs. The problem is it's going to be driven by only a few names. So, you get a bad report out of NVIDIA, you're going to see that sector tumble like a rock. Anything that has to do with AI, if it disappoints, the Qs are going to go down. Oh, I see it. All right, sorry. I thought you meant a W formation. That's this here. Yeah, we can take a look at it. We don't have much time left, but let me just go through these and we'll take a look. The banks up on the week, a little bit of a fade. Let's go to gold. You know what? Let's go to oil. Oil first. Now, oil was down on the week. It is now positive. Is this updated? Yeah. Last I looked, it was flat on the session. Yeah. Light sweet crude closed out the day flat. This is the November contract. I'm not exactly sure why this is showing crude oil as being down. Let's refresh this. It was not down today. It was up. Let's go to the USO. The USO showing is down as well. Strange. I can't explain that. Gasoline prices moving lower. Good stuff. Oil. Nice bull run here early on in the week. We may have a trade here to get long. Members, more to come on oil. Gold. I can't touch it. I've been very reluctant to touch it. It's up 2% on the week. I don't think that this holds. Strong rally. I think this breaks and we move lower. Gold miners, reversal week. Still up. One trading day left to go. All right, let's do some chart requests. We'll call it a night. All right. Folks, we're going to be using TrendSpider automated technical analysis. I give it away free to our silver and gold level members. Link below, the Contrarian Trader. 14-day free trial offer. All that good stuff. the hell's with this chart? What is with my chart? That was weird. All right, that's better. Okay. All right. So Tesla. Tesla had a good close today, but we are at some resistance on a weekly time frame. Volume is probably going to run in a little bit below average. The problem for Tesla is that we are up against serious resistance. And if you go back, you can see that this upper band has been resistance since July. Now, if we break lower here, where the problem comes in for Tesla is that where we've retraced all the way back down to this support level, this time around, we're probably going to break this support level. And RSI is looking pretty weak. So I was short Tesla, covered that short. I'm looking to re-short it. I just don't want to do it in advance of earnings. So if you take a look at another view of Tesla, and this is the one that's in the back of my head. Not that one. I promise you I have a chart here of Tesla. Is this it? This is it. Okay, so Tesla broke down the week of September the 18th. Then we rallied, as is typical. You think these funds are just going to allow Tesla to drop like a rock? No. Way too many funds own Tesla. They're going to get out slowly, methodically. So what we're doing is that we are attempting to recapture prior support. I think that this fails. And I hope that they jack it up on earnings because I would like to short into that squeeze. But I'm not going to trade this in advance of earnings. Way too much risk. So Tesla, I think that the price action has been okay. It's underperforming the Qs on the week. So just be careful. W. At the contrarian trade, I am in PAGS, which has no debt, which is Brazil. And like PayPal in many ways, PAG's last quarter profit, 24% upgrades to around $14. All right, we'll take a look at it. For you, Michael Anthony, is Anthony your middle name? Because if it is, we got a brotherhood going on. That's my middle name. Wayfair, wow. I haven't even thought about this stock in a long time. This is dead money. This is a short. There's nothing to do here. Anthony's your first name. No, that's Tony B. I was talking about Michael Anthony here. Anthony, I know a lot of Anthonys. I'm in New York. We have a lot of Anthonys here, including me. W on a weekly chart. You got to avoid this. Making lower lows, daily view. We've broken support. This is rock solid support no longer. So while they may spike it up, I would be shorting this into $51.33 per share. I would check the short interest on this. My guess is that there are a lot of shorts in this name. Let's validate that. I might not short it outright. Because I'd be afraid of a big short squeeze. Yeah. This is a major short squeeze candidate. I would not short these shares. So the way I do my math, I don't pay attention to shares percentage of a float. That really doesn't matter. What matters is number of shares short divided by the 3-month average daily volume. That gives you your numbers of days to cover. Now, I'm not that bright. So my guess is this is about what, 9 days, 8 days to cover? No, thank you. Maybe a little bit more. No, thank you. I would sell a call spread. I would sell a 20 delta call, then buy a 10 delta call to protect that position and just leg it down as the shares move down. Roll it in short. I would not short these shares. Very, very dangerous stock to short. Tony B, my son Anthony, father, grandfather. Oh, from Philadelphia. All right, so you same demographic as New York. Anthony's your last name. Oh, like Anthony Michael Hall. Oh no, Hall was his last name. Okay. Wow, those are so many variations. Michael Earl Anthony. Wow. All right. Where you from, Michael? All right. What else do we want to go over here? We went over Tesla. We did W, PAGS, and ES wants NVIDIA. We'll leave it off with those two, PAGS. Pagsquergo Digital. I don't know this company. It's got to hold $7.73. If it fails, it's going a lot lower. I think this is a buy, but you got to use a stop right down below that support level and get out on a break. Daily view. Ugh. Before you buy, I would wait to see whether or not we hold $8.07. Pretty sloppy chart. It's trying to put something together, you could tell, but the fact that we broke out on the 10th and failed to hold it 2 days later, that's a problem. That's a real problem. Columbus, Georgia. Okay. You know, I was driving down 95 one time. I was right outside of Atlanta, right by the Florida border. That's where I was headed. And I was doing like 90. It's like 6 o'clock, 7 o'clock in the morning. I had no idea I was doing 90. And those cops down in Georgia, those highway patrolmen, goddamn, they're militaristic. These guys came down this ramp, 2 or 3 cop cars, perfect timing, speed. And the second I looked up on that ramp, I knew they nailed me. And each one of them, as soon as they hit the highway, each one got a guy. They got me for 90. And because I respected the cop, he dropped it down to below 90, so I didn't get a super speeder. I'll never forget that. I want to thank that cop. All right, we'll leave it off with NVIDIA. I don't know. It looks pretty good. You know, if you take a look at Avago today, Broadcom, previously known as Avago. Look at that move on Broadcom today. This is AI. This is why I said that about the Qs earlier. If there's any negative news about AI, the Qs are gone. They're toast. AI is what it's all about. So Broadcom, big move up higher today. NVIDIA is the pimp Mac daddy of the infrastructure of AI. This could easily move up higher. Daily view. A close above 474 per share. I'd be a buyer of NVIDIA. They don't report earnings until next month, so plenty of time to make money there and get out before earnings. Dan, thank you, Bob. Your favorite patriot. I look forward to listening. Thank you very much, Dan. Look forward to having you. Folks, thanks for sticking around and dealing with my audio issues up front. Really not an audio issue. It's a producer issue, me. And thanks for being here. Have an awesome night. Profitable trading day tomorrow. Talk to you soon.